Hello and welcome to the September episode of First Look ETF. I'm Stanton with ETF Guide. It is great to have you with us. Coming up on today's show, we will dive into the dynamic world of growth investing in stocks. Plus, we'll examine a pair of ETFs within the small cap arena with a unique investment strategy. But first, to kick things off, we've got Maital Legum. She is with the New York Stock Exchange joining us now. Maital, it is great to see you.
Oh, it's great to see you again. I'm excited for another episode.
Yeah, let's start with an update on the latest ETF launch activity at the NYSE. What are we seeing?
So the ETF industry remained busy throughout the summer as everyone was busy ramping up for a busy fall. So in August, we saw 40 new ETFs launched, raising over $1 billion in asset under management. So for those of us who keep track of this stuff, this brings the industry total to over 3,653 ETFs, and we're nearing close to $10 trillion in asset under management.
Yeah, it really has been incredible so far this year. You know, we are winding things down, heading into Q4 here. The ETF market has already surpassed several key milestones. What has been driving this growth, in your opinion?
So I know it sounds like we keep repeating ourselves, but actively managed ETFs remain a focal point this year, with 73% of all launches and almost a third of all cash flows going into those funds. So of the 294 active ETFs that were launched this year, we are also seeing that over a quarter have either been going into buffer or single stock ETFs, signaling strong investor appetite for income and limiting downside risk. So similarly, we are seeing this trend through the continued focus in fixed income. So roughly a third of cash flow this year have gone into fixed income ETFs as well.
On that note then, as we again round out the year, what are some other developments and trends that you guys are monitoring?
Sure. So, we continue to see more asset managers throw their hat in the ring and file proposals with the SEC for approval of the multi-share class, which will allow asset managers to create a new class of ETFs for their existing mutual funds, which will certainly make it even easier to launch ETFs and provide issuers with more flexibility and make it easier for managers to convert their mutual funds to ETFs. And so we keep seeing that trend, and as more managers are converting their mutual funds into ETFs, that trend has been going on for the last couple of years. We've actually seen over $73 billion in mutual funds to ETF conversions so far, with more coming as we head towards the end of the year. And, of course, we can't ignore the importance of education. So as more investors are choosing the ETF as their vehicle of choice, it's important that we provide them with access to the best-in-class information. So make sure you go to etfcentral.com and follow along and learn more about the CETF designation and everything that platform has to offer.
Absolutely. So much good information. Maital Legum, thank you so much for joining us from the NYSE. Keep up the great work. We'll see you soon.
All right. Great to see you.
And just a quick reminder to watch First Look ETF on Apple TV, Amazon Fire TV, and Roku. We also simulcast First Look ETF on iTunes, Spotify, Amazon Music, and other major podcasting platforms, so don't miss it. Although mega cap stocks like Nvidia, Microsoft, and others have gotten a lot of attention this year, all of these huge enterprises were at one time small companies. And small cap stocks are an important area of the stock market that some investors have neglected or overlooked. We're here to elaborate about the opportunity in small cap stocks, and a pair of recently launched ETFs in this category is Kristof Gleich, President and Chief Investment Officer at Harbor Capital. Kristof, it is such a pleasure to have you.
Thank you so much for having me.
Okay, before we dive into your ETFs, let's talk about some of the challenges facing small cap investors at this time.
Yeah, it's an interesting asset class. Look, small caps, I think, being kind, have been overlooked, but perhaps being more accurate, it's a forgotten asset class. And it's hard to argue with over the last few years. You mentioned around the larger cap names, the Magnificent Seven. Of course, we've had the AI theme in markets, and that's all been happening in large cap. And so small caps have been left behind. They've been left behind from an earnings growth perspective, from a cash flow generation perspective, and from an investor returns perspective as well. However, we do think we could be at an inflection point here on out. We believe that the prospects for the asset class for small cap are turning much more favorable at this point in the cycle. I'd point to really two things. Number one, from a fundamental perspective, small cap earnings are expected to outstrip or outgrow large cap for the first time in about 5 years, and that's going to start to happen as we get towards the end of this year into 2025 and 2026. And of course, Chairman Powell effectively rang the bell on interest rate policy, and that we're now going to be in a cutting policy. And typically small caps outperform large caps when the Federal Reserve are easing monetary policy. So we think it's a much more interesting time for small cap investors going forward.
So on that note, Harbor offers a few unique small cap equity solutions. Two examples are the Harbor Alpha Edge Small Cap Earners ETF, and your ticker there is EBIT, and then the Harbor Active Small Cap ETF and the ticker SMLL. Starting with EBIT, tell us more about these ETFs and their investment strategies.
So we've got the two ETFs we're going to talk about today are in some ways very different and in some ways solving for similar outcomes. So let me start with EBIT, which we call EBIT. That is our index, our small cap earners index ETF with the ticker EBIT. And effectively what this tries to capture is the profitability premium that we believe is a structural source of alpha in small cap. It will probably come as no surprise to your viewers, and I'm sure they've read and heard and seen this statistic, but almost 40%, a record high 40% of the small cap names in the Russell 2000 index do not produce a profit. And we think part of the reason that investors have had a poor experience of this asset class over the last decade or so is that the level of unprofitability in the small cap asset class is growing. And so in EBIT, what we strike to do is to take out the unprofitable names, and then out of the profitable universe that we have left, instead of weighting by market cap, we weight by profitability. So if you're a business and you earn more profits, you earn a bigger weight in that ETF. That's the small cap earners, the EBIT ETF, which we think is a great structural allocation. The second ETF, SMLL or small, is a more traditional, actively managed small cap ETF. We've partnered with a boutique, specialized small cap investor called Byron Place. It's founded and run by Glenn Goransky, who was formerly a 5-star and top percentile small cap manager, where he used to work at JP Morgan Asset Management. He built a great track record of picking winning small cap companies with a fundamental discretionary approach, investing in about 40 to 60 companies with a true active, high active share approach. And he's now taken that to his own boutique, and we've partnered with Glenn. That's very much in our wheelhouse of what we do at Harbor, is partnering with these specialized money managers. And we think the active small cap ETF universe is underserved. You'll see a lot of very diversified approaches in there. This is a best of 40 to 60, cost effective, fully transparent ETF, which we're really very excited, and we just launched a couple of weeks ago.
So then when we're thinking about a diversified investment portfolio, how might EBIT and small be deployed?
So I would urge viewers and investors, think about diversification. There's a lot of uncertainty in the world. Nobody knows exactly what's going to happen in the future. So don't just go chasing returns and what's worked well, which would just lead you narrowly into an increasingly narrow market of large cap. We think small cap is worthy of a strategic allocation in your portfolio. We think it's getting more favorable. As it relates to EBIT, we think we've created a better index approach to the asset class. So if you look at some of the ETF stalwarts or behemoths within small cap, whether it's an IJR, an IWM, a VB, a VBR, these ETFs, there's nothing wrong with them. They have over 250 billion of assets of under management in them, but we think we can improve investor experience and investor returns by taking an alternate index approach through EBIT. For clients and investors that prefer a true active approach, we strongly believe that active management in small cap works. It's a much more inefficient asset class. There's a lot less sell side coverage. And for someone to go through, if you like, and pick out the gems, we believe an active approach is the way of maximizing the returns that you can get from the asset class. And so for your active allocation, we believe small, that's SMLL, run by Glenn Goransky and Byron Place, is a great solution. And we think it's really unique in this ETF structure because we believe that investors today have been underserved by high quality, actively managed small cap ETFs. And we think we're leading the way.
All right, we are going to leave it there. Kristof, thank you so much for bringing us up to speed on your small cap ETFs from my hometown of Chicago. It's great to have you.
Thank you so much for having me.
That does it for today's episode of First Look ETF. If you enjoyed the show, please tell us in the comment section below and by hitting the like button. A big thanks to all of our guests, along with Maital Legum from the New York Stock Exchange. Be sure to check out etfcentral.com to learn more. I'm Stephanie Stanton with ETF Guide. Thank you so much for watching. We'll see you next time.